Hello, hello, and welcome to January 19th, 2021 with Alpha's new leader, Nike at 22%. And there it is, Nike at 22%. There is going to be some put, and we are at last bar high going in the down direction, and we are 22% on Nike. Going down now to the next leader is PGR. PGR is running at 10%. It is a call, and we have a nice upswing on the 30-day moving average. We have a nice swing up on the indicators down below. We should be able to get a nice profitable trade out of PGR. Okay, so we had four loss leaders this today. Not very happy, but let me start off with the biggie one at the top. I want to call your attention to day trader left one. What that means is this account under 25,000. Under 25,000, we are only allowed 3-day pattern rules, 3-day pattern trades in a 5-day trading period. I had two happen. KR got stopped out on my error. I had an entry and an exit on the same value. Lost $4 on that. But then today happened with Berkshire, whatever. There. Berkshire Hathaway. Okay, here is what happened. A long-legged doji. Let me zoom in and show you in real strong detail what that means. And it happens. And that's what it was. You can see here. Our entry was a put. This is today's lesson. The entry was a put, which we got filled here. Opened here on the high, which we then were not triggered, but then the price came down and triggered, and we got triggered into the trade, and then it came and got stopped out. That is a day pattern trader, and the end result was we lost $60 on one contract with $2 in fees, $62 for the trade loss, 1040 carry with a new loss now 1102. But the real danger is not the money loss. The real danger is the day patterns that I have left. I have one more left. Here's what happens. I'm allowed 3 for every 5 trading days. If I hit 0, and if something inadvertently goes wrong, as we did today with a long-legged doji, was not anticipating this, the end result will be is that my account gets locked up for 90 days. I had lost 2 accounts that way in my early days of trading. That's why we have a lot of lost leaders on the alphas. So there are 3 ways to protect yourself on this, and that is here. There it is. There are 3 ways. One, have a long distance stop. I thought the green price channel was pretty, a nice good distance, but it was not. Which means, therefore, what you got to do is arbitrarily say, okay, look, if you're 236 and I'm going to high, I'm going to go 250 or 255. It doesn't really matter. Just keep it far enough away so that you don't get hit with the day day trader's pattern rule. And then on the second day, we go to last bar high or low in the direction of the trade. The second way of doing it is going 3 ATR. People are like, I don't, where do I put the number? Where Kipple? If the ATR here is 3 and the ATR on this particular instrument is right there, it's at $3.30 round off. So let's go ahead and get the calculator up. So we come over here, and if you're using the ATR exit rule, no problem. 330 times 3, 990. This is a put. Our entry is 233.48. So then we go plus 233.48, and we come out to 243.38. And remember, we're just trying to keep away from getting stopped out in the same trading session as it happened here. So you can say, arbitrarily, so let's make it 245. Done. Make it 245, and you have a good distance that you're not going to get hit with the day pattern unless we have another crash, which happens. It happened in the, I believe it was February of 2019. I think it was February 2019 where we had a major, well, we also saw it this last March, right here in 2020. Those days happen. So the third way, which has been discussed and brought up in my schools, and there are traders who do this, no stops. Wait till the order is triggered, then enter the stop. So the order would trigger at the end of day trading. Your order would have triggered, the market's closed. Now go ahead and set your stop, and you can go ahead and set your stop for your last bar high or low in the direction of the trade. So that is a way to avoid getting hit with the day traders pattern rule for accounts under $25,000. Over $25,000, you can trade all you want. So that is the situation there on and that was the Berkshire Hathaway loss today. So our other losses with T minus, XLV, and XLK. We'll run through those quickly because I want to get to the euro. So over here at T minus, we got hit with a $48 loss, 8%, and so 8% in 6 days, but it's still manageable. $48 and added to a 1975 with a $2 in fee came up $50, and we have a new O of 2025 on T minus. XLV. Now XLV is the one that really is heartbreaking and very painful. Again, the market does what it does. All we got to do is be able to roll with the punches, and this took a heck of a roll, and here's why. This trade this trade was estimated to cost only, I estimated the cost as 612. I have a little way of taking delta, the entry point, the exit point, and then divide it into the delta, multiply it into the delta, and you get a projected option cost. I was anticipating playing 612, thereabouts, 5 or 10 cents difference. I got hit with 775. That's $1.60. We were already in the hole by a humongous amount of percentage points into this trade. And the end result is we've had a 36.8 loss in 5 days. These things will happen. So $285 on one contract, $285, $2 in fee, $287 for the trade loss, $467 from the carry, and then now a new O now of $752 for XLV1. Now we'll go on to XLK. XLK got stopped out also. It was not a good day in La La Land. So here we go. And again, now the loss, now look at the loss. On a normal trade, we would be in that 8-9% loss, which is like 50, $60. Therefore, the O does not increase much bigger, and therefore we have an opportunity of bringing it down. I mean, you guys saw recently, watch my video from Friday, January 15th, where Walgreen paid us back. We owed almost 2,600 and we got back 700, about 770 something dollars. And now the new O is down in the 1800s. It was virtually a 80% haircut off that. In fact, those notes will still be on the screen. Yep, sure enough, there it is. There's our notes from our closing trade on Friday, when we got out with 126% in 11 days, and we got back 392 on two contracts, making 782, $3 in fees, 779 with a 25.93 O to a new O of 1814. And that is the conclusion for the alphas. Unfortunately, the Tigers have not gotten funded yet, and we are still waiting for that opportunity. What's happening there is, where is euro? I lost my euro. Okay, no problem. I just go over here and go euro. There it is. So the euro is still, this is not the right screen. We have to go down to the 1 minute chart. Remember that in the trading for the for binaries, which is what we're going to be going into, a whole new arena for me, not for a lot of other my fellow traders. A lot of my fellow traders are already in this. In the new trade group that I'm with, there's over 30 people already doing this from the small trade group that I'm in. And oopsie, messed up. All right. Running out of time here. All right. But the bottom line is you see that the euro is still doing a nice opportunities here. With that said, we're going to go ahead and conclude tonight's report with Nike at 22%, Tigers at 0, and the Alphas at 4. And I thank you very much for stopping by and checking it out. Bye-bye.